Hello, and welcome to our financial briefing for December 18, 2024. The global financial landscape is witnessing remarkable changes and pivotal moments. From record-breaking bond inflows to corporate challenges, central bank decisions, and holiday season strategies. Today, we'll dive deep into the trends shaping the economy and markets. Let's get started. One of the biggest stories today is the surge in global bond fund inflows, which have hit a record $600 billion this year. This marks a dramatic shift from 2022, when investors withdrew $250 billion. What's driving this? Investors are finding solace in bond markets thanks to some of the highest yields in over a decade. The ICE Buffet Global Bond Index now boasts yields exceeding 4.5%, levels we haven't seen since the 2008 financial crisis. This rally has been broad-based. Developed markets like the US and Europe have seen substantial inflows, but emerging market bonds are also thriving. Corporate bonds in particular have gained favor, alongside passive exchange-traded funds or ETFs. However, experts warn this momentum might taper in 2025. Why? Rising equity markets could lure investors back to stocks, and skepticism is growing about whether corporate bonds can sustain their strong performance. For those eyeing bonds, this is a time to assess risk versus reward carefully. Are we in for continued gains, or could these investments peak sooner than expected? Next up, Tesla and Elon Musk are back in the headlines. The tech giant's $129 billion compensation package for Musk has hit a roadblock. A Delaware judge declined to approve the deal, citing fairness concerns. Now Tesla's board faces a dilemma. Should they appeal this decision or renegotiate Musk's pay package? Both options could cost Tesla billions, not to mention create significant tax and accounting challenges. This development raises broader questions about executive pay. Is the reward system for top CEOs becoming unsustainable, especially in volatile market conditions? And what does this mean for Tesla's investors, who've already faced ups and downs with the stock this year? We'll keep a close eye on how Tesla handles this and how it might affect shareholder sentiment going forward. Now let's turn to the Federal Reserve. All eyes are on the central bank as speculation mounts about potential rate cuts. For months, the Fed has been raising rates to combat inflation. But with inflation showing signs of cooling and economic growth moderating, many believe the Fed could pivot to rate cuts in 2024. The US dollar has remained stable against other major currencies as investors await the Fed's decision. A rate cut could weaken the dollar, boost equity markets, and potentially drive global capital flows. But there's also caution. The timing and magnitude of these cuts will be critical. Too soon or too aggressive, and we could see unintended consequences for inflation and market stability. Over in the UK, wage growth has become a central focus. Employers have maintained a 4% average pay award for the fifth straight month. This is down from the 6% average seen in 2023, but still signals ongoing pressure in the labor market. The Bank of England is watching this closely. Why? Wage growth plays a key role in inflation, and with the UK facing rising social security contributions and a near 7% minimum wage increase in April 2025, inflationary pressures could persist. Employers are navigating these challenges while grappling with a slowing economy. For workers, this steady wage growth provides some relief, but it may not be enough to offset rising living costs. Now, let's talk about the stock market. The Dow Jones Industrial Average has seen a losing streak of 9 straight sessions. This cautious sentiment reflects broader concerns. Investors are awaiting key economic data and the Federal Reserve's next moves. Meanwhile, the Gift Nifty suggests Indian equities might open weaker, signaling global market volatility. What does this mean for you? Diversification remains key. Keeping an eye on economic indicators like retail sales, GDP, and employment data will help navigate these turbulent times. With the holidays just around the corner, many people are looking for ways to boost their finances. Here are a few quick tips to help you manage holiday expenses. Check for tax rebates. You might have overpaid on taxes and could be eligible for a refund. Sell unwanted items online. Declutter your home and make some extra cash. Exchange leftover foreign currency. That spare change from your last trip could add up. Rent out belongings. From cars to tools, renting out items you don't use often can be a quick moneymaker. Take up odd jobs. From freelancing to gig work, there are plenty of opportunities to earn on the side. These strategies can provide a financial cushion during the festive season and help you start 2025 on a stronger note. The IPO market continues to buzz. Today, YSX Tech Co. Ltd. is set to debut on the NASDAQ, among other listings. For investors, IPOs present both opportunities and risks. It's important to research the company, understand its valuation, and assess market conditions before investing. Finally, as the year winds down, the financial community is reflecting on the leaders we lost in 2024. These individuals made lasting contributions to the industry and helped shape its future. Their absence reminds us of the importance of innovation, resilience, and vision in navigating the ever-evolving financial world. Today's financial landscape is dynamic and full of opportunities and challenges. Whether it's record bond inflows, corporate controversies, or holiday planning, staying informed is your best tool for success. Thank you for joining us on this December 18th, 2024 financial briefing. Don't forget to like, subscribe, and share your thoughts in the comments. We'll see you in the next update.